Can you share the slides? Good afternoon, everybody. Deepak, please share the slide. Who is sharing the slide?
Shivani is sharing the slide.
Great. Good afternoon, friends. Thanks for joining this webinar on the e-invoicing. This webinar is with the partnership of our technical support partners, Cygnet One and Crowe. All of you are well aware about that. Crowe is very aggressive in the all sort of new upcoming challenges and any regulations. So we have a team from the Cygnet, then we have a VAT champion as well as a technology champion. So good part is that Crowe have both the supports, technology side and VAT side. And with the background of Crowe UAE, see Crowe is a global firm. We are in the one of the top 10 firm. And Crowe UAE, we have 5 offices and 453 headcounts in the UAE as well as 200 in the back office. We have 17 people in the tax and technology team, which helping client to evaluate and implement the e-invoicing. And this number is going to be increased very soon, very honestly. So this is all about the Crowe. Any corner of the UAE, we are available for the implementations. Uh, Apart from that, Crowe is a global firm. We are also implementing in many other countries, Crowe, with the different partners in the different countries. And as you are well aware about that, e-invoicing is a future for the tax and technology. Many countries adopted that in Europe, in Africa, and a lot of upgrades are coming in and changes are coming in the e-invoicing side. Now going to the next slides about the Crowe. Crowe is in the multi-dimensional services fair. So as earlier it was known as audit firm, but apart from that, we do the risk advisory, tax, technology. We have a Crowe Academies also. So that is what we are managing the training for the clients, and there will be the paid classes are there also. So over to Deepak. This is all about the Crowe. Further, we can discuss later on. Yeah, Deepak, over to you.
Yeah. Thank you, Binit. Hello, everyone. Thank you so much for joining us. I'm Shivani Thakkar, your host for today. I have been with Cygnet in the marketing department for the past 2 years. Our topic for today is UAE's invoicing system. Prepare for 2027. The UAE Ministry of Finance has announced a nationwide e-invoicing framework set to go live by 2027, a major digital transformation that will redefine how business issue, process, and report invoices. The objective is clear: to enhance transparency, improve efficiency, and align with global e-invoicing best practices. However, the journey to compliance requires early preparation, from understanding the mandates and timeline to identifying excluded activities, managing ARP readiness, and choosing the right solution partner. That's exactly what we'll be covering in today's session. Overview and new mandates on invoicing, implementation plan and deadline issued by MOF, excluded activities and personas under the invoicing regulations, common challenges, how to select the right ASP that suits your business, UA invoicing, sample use cases, and finally demo and question and answer. By the end of this session, you will have a clear understanding of the roadmap ahead and the practical steps you can take to get ready for 2027. Without further delay, let me introduce our speakers. Mr. Akash Chaudhary. Akash specializes in digital transformation with a focus on compliance and automation. He has successfully led invoicing projects across the Middle East, guiding organizations to maintain compliance while enhancing operational efficiency. Mr. Deepak Variyam. Deepak has 15 years of experience in indirect tax across Big Four firms, leading consultancies and the UAE federal tax authorities. He specializes in UAE VAT and Excise, Malaysia GST, tax audits, compliance advisory, and data visualization tool with leadership experience in client management, project delivery, and sector-specific training. He has served clients in real estate, hospitality, FMCG, financial service, and logistics. Mr. Rahul Domadia. Rahul is a technology expert with 26 years of experience, including 16 years of leading large-scale digital transformation initiative. He specializes in AI strategy, ERP implementation, IoT integration, and data-driven decision making. He has Rahul holds certification in AI, ITIL, V3, and PMP, and actively contributes to Crow's IT committee. Let's make this webinar interactive. Please feel free to drop your questions in the Q&A section during the webinar, and we will address them at the end of the session. Over to you, Deepak.
Thank you, Binit, for the introduction, opening remarks, and Shivani for the speaker's introduction. Um, we all know that we all are getting a lot of updates from the tax authority these days. Every Friday there will be some update in the UAE for it can be VAT related or excise tax, or it can be corporate tax related matters. But today's we are going to cover what are the updates with respect to the upcoming e-invoicing program or framework. Can you move to the next slide? I wanted to start saying good afternoon, everyone, and thank you so much for your overwhelming response for this webinar. Uh, we we would like to go walk you through the timelines that is important for you to understand where we stand and why we are gathering to understand these timelines, how important it is with respect to e-invoicing framework. The whole discussion started sometime in July 2023 when Ministry of Finance announced several digital transformation projects in UAE, and one among them was e-invoicing framework or e-invoicing implementation. And towards the end of 2024, sometime in October 2024, the invoicing um, information portal was active by in MOF website. And then they also released a lot of FAQs related to e-invoicing implementations. But if you ask me today, they have removed this FAQ section and the portal that was created for e-invoicing because of the recent update and recent legislation announcement. Maybe we are expecting there is an enhanced updates, or the portal will be more visible to everyone with the additional details. Then going back to February 2025, there was a public consultation document was launched by MOF inviting businesses to share feedback on the proposed data fields requirements for e-invoicing perspective. So what are the mandatory fields to be incorporated when it comes to e-invoicing? This was released through a public consultation document in February 2025. Then last month in September, we have seen two ministerial decisions released explaining the e-invoicing rollout plan. We have also seen the pre-approved list of accredited service providers released by Ministry of Finance. You will come to know what is an ASP and what is their role with respect to e-invoicing implementation. If you look at these ministerial decisions, from 1st of January 2027, the UAE will officially go live with e-invoicing, marking the significant milestone in the country with respect to digital transformation. As we all know that we are moving away from the traditional way of issuing invoices, like issuing a PDF or Excel format or any other format of invoice into a structured electronic format, which will be validated, transmitted through a platform, and it will be archived as per the FTA requirement. You all might be wondering or asking me, why are we still talking about invoicing when there is an extended timeline or extended implementation timeline announced by Ministry of Finance recently that it will be only implemented from January 2027? Because the reason why we are still highlighting or giving importance to this e-invoicing matter is It is not just a tax project, it is just a business transformation project, which requires a lot of integration, system integrations. You also need to do gap assessment, whether your current system is capable enough to incorporate all these requirements as per the tax authority. In coming slides, we will explore what this mandate means for your business, the preparation timeline, and the essential steps that you all need to take to ensure a smooth transition. Can you go to the next slide, Shivani? See now from the ministerial decisions 243 and 244, which was released last month, uh, uh, the e-invoicing implementations will happen in phased manner in UAE. Businesses with annual revenue more than or equal to 50 million will be the first wave of mandatory implementation. These businesses must need to appoint the accredited service providers by 31st July 2026 and go live date with invoicing by 1st of January 2027. For businesses with revenue less than 50 million, they must appoint the accredited service providers by 31st of March 2027 and go live by 1st of July 2027. They have also given some extended timeline for all government entities. They all will follow or appoint an ASP by 31st March 2027 and go live by October 2027. Apart from these three categories, there is a pilot program also will be launched from 1st of July 2026 for a selected type of or selected group of taxpayers. This phase will be to test the systems and processes before the full-fledged e-invoicing implementations. So these taxpayers will be the pilot for implementing e-invoicing in this country. And most importantly, there is a concept of voluntary participation is also open to all businesses from 1st of July 2026. If your system is ready or if your team is ready, we would strongly recommend to start voluntarily implementing the e-invoicing from 1st of July 2026. So in summary, the key takeaway is the earlier you start preparing for e-invoicing, the smoother your transition will become and the e-invoicing journey will become smoother. Moving to the next slide, we also wanted to give you a heads up on excluded activities or the excluded person as per the e-invoicing regulations. While we have seen the ministerial decision released in last September, uh, there are certain exclusions given to certain type of transactions or certain type of persons. We believe these exclusions exist because these sectors already use some standardized format of electronic invoicing. So the government may do not want to hamper those uh, regulatory requirements. So that could be the one of the reason that they have classified some exclusions or say excluded activities or excluded persons with respect to invoicing. The first one category is the government entities, the performance government departments who's actually looking into purely government transactions or functions like issuance of license, fines, or permits. These will be considered as sovereign activity. These activities will be considered as excluded activity as per the ministerial decision. And international passenger transportation services, which will be provided by the airlines, that will be considered as an excluded activity for electronic invoicing perspective. So if you are into international transportation of passengers or airlines operating in UAE, you may need to assess whether all these transactions will be subject to e-invoicing framework or not. The next category is any ancillary services with electronic miscellaneous documents issuance of involved in airline industry. So that will also fall under the excluded activities. Other activities which is excluded is international goods transportations by air. There is a temporary exemption given for 24 months for these activities. So any air freight cargo services where airway bills are issued, those would be considered as excluded activity with respect to e-invoicing. Then lastly, the financial services, banks, insurance companies, or financial institutions providing VAT exempt supplies or zero rated services under Article 42 of the executive regulations will fall under this exempted or excluded activities. So the takeaway here is, so unless you fall under one of these very specific categories, your invoicing process will need to be aligned with the FTA required or MOF required e-invoicing framework. And moving to the next slide, I would like to explain some of the important updates from the VAT legislation's perspective with respect to e-invoicing. The first section is related to simplified tax invoices. Currently, UAE VAT law allows two types of tax invoices. One is full tax invoices, and the other one is simplified tax invoice. Full tax invoices where you all need to require to follow Article 59 of the VAT Executive Regulation. Simplified tax invoices is the B2C transactions majorly considered for B2C transaction, or some B2B transactions where the value is less than AED 10,000. So once in e-invoicing is implemented, the concept of simplified tax invoice will be abolished. It means that every single transactions must go through the e-invoicing system, excluding the B2C transactions, because it has been clearly mentioned that B2C transactions will not fall under the e-invoicing framework at present. The second category is zero-rated supplies. Although zero-rated supplies like export of goods or export of services, international transportation of goods and passengers, or supply of certain medical supplies fall under the category of zero-rated supplies. Currently, if you look at the VAT legislation, there is no mandatory requirement to issue a tax invoice or if you are only making or fully making tax zero-rated supplies as per Article 59 of the Executive Regulation. However, it is clarified in the amendment of the Executive Regulations. You all need to issue an invoice, e-invoice, as per the framework, even though you are making an zero-rated supplies. So that's the clarity given in the amended Executive Regulations. Then credit note. What is the change made in the tax regulations? Currently, a business issuing a tax credit note due to sales returns or discount or price corrections or VAT treatment error. It includes, as per the credit note format, you have to follow a specific format where you have to mention the original invoice value, correct invoice value, and difference between these two. However, in under the e-invoicing framework, the structured electronic credit note only need to show the credit amount being adjusted and the applicable VAT amount or VAT adjustment. So you don't need to restate or mention again the full original invoice amount or revised invoice details. But there is still a requirement that you have to issue or you have to mention the original invoice number. The next amendment was related to administrative exceptions. Currently, FTA sometimes allows to issue a tax invoice without meeting all the required requirements as per Article 59 of the Executive Regulation. So this is considered as an administrative exceptions given to certain taxpayers who have applied for this. But when it comes to invoicing systems becomes fully operational, all these administrative exceptions will no longer apply. So this is a very major important update. Any taxpayers who have received any administrative exceptions for issuing a tax invoice as per the VAT regime, they may need to reassess and then make corrective measures to align with the e-invoicing regulation. So now that we have understood this is the legal framework for the UAE invoicing model, let's take one step further to understand how important it is to understand the practical intricacies you may face when it comes to invoicing implementation, that too in a phased manner. To give us more insight on this, I would like to invite Mr. Akash, Vice President of Cygnet. our e-invoicing solution partner who have received a pre-approval from the Ministry of Finance and as one of the accredited service provider in UAE. Over to you, Akash. Thank you.
Hi, Deepak,
Hi.
thank you so much for giving the overall background, and thank you everyone for joining us for this session. I definitely agree that this is one of the most interesting topics at the moment within the region. And in terms of talking about our background and how we are supporting businesses with the e-invoicing, I want to take a step back and talk about who we are. So we have been living the trust of our customers for more than 25 years, and we have got offices across the globe through which we are able to serve the customers and our partners within the region for various different initiatives. And it is not just limited to e-invoicing, but a lot of other finance transformation projects as well. And in order to do so, we have got all the right certifications, right from CMML level 5 for the product development, plus the SOC 1, SOC 2 compliance for the data security, and all the ISO certificates. Because we are talking about e-invoicing, data security and integrity is one of the primary factors. And hence, I'm highlighting that any partners or any organization must have at least these minimum credentials to ensure that your transactional data always stays in a secured environment. Yep. Can go to the next one. In terms of overall accreditations, so in order to serve any enterprises, to give them the right e-invoicing solutions, we have to ensure that we are accredited by the right technology partner and the tax authority within that particular region. So Cygnet is being accredited by PayPal. So PayPal is a global body which manages the PayPal access point and SMPs. And since UAE PayPal framework for the e-invoicing, Cygnet has already been accredited with PayPal since last 4 years. In terms of other geographies as well, we have got accreditations from Zatka, from MDEC in Malaysia, Zatka is in Saudi Arabia, BOSA, Belgium, HMRC in UK, and we are even FTA recognized for our VAT solution. So in terms of understanding how authorities work and understanding what data they will need, what validations they will execute, we have got quite well experience across the globe. Yeah. Now talking about the nitty-gritties of the crux of what is an e-invoice. Well, most of you would already know this, you would have attended few sessions, but I want to go into the basics first. That some might have an understanding that if I sent you a digital copy of an invoice, it is called an e-invoice. Well, that's not the case. For an invoice to be called an e-invoice, it has to follow certain structure and a network. So when I mention or when I talk about a structure, what it means is it needs to follow a particular PDF, a particular XML structure, have minimum particular defined fields, and all of these criteria are defined by the governing body of that particular country. Second requirement is it must be communicated through a prescribed medium like a network. It could be email, it could be a PayPal network, it could be a digital medium. It depends from country to country. Like in some European countries, they allow all digital mediums. You can send an e-invoice through email. You can send an e-invoice through WhatsApp as well, as long as it is digital medium. But in UAE, we have got PayPal network as the only defined network through which you can communicate or you can circulate the e-invoice. And third important criteria is reporting it to the FTA, that an e-invoice must have been reported to the FTA and MOF as per the prescribed flow of the five-corner framework. Now going further, I want to talk about the details of this particular framework. Just a second, let the slide change. Yes. So the things which I mentioned on the components part, the structured XML, the integration, the archival. So whenever you are planning to deploy an ASP to take care of the e-invoicing, you must ensure where you are hosting this particular the ASP solution or your e-invoicing portal, how you are going to manage your cross-border transaction, and even the archival and the routing of these invoices. And you need to ensure that since this is applicable for both B2B and B2G, you are connecting it to all your right source systems to do the integrations and get the data going. Now, the five corner model, this is one of the most critical part of the whole e-invoicing framework. Here, you need to always understand that corner 1 and 4 will always be you as a taxpayer. You will always be an enterprise. Corner 2 and 3 will always be an ASP. I'll mention more about what is an ASP. And corner 5 will always be the tax authority or the ministry within that particular region. Now, 2 and 3, these ASPs are technically a PayPal accredited access point and SMP, which are also accredited and reviewed by the local tax authority. So we have in UAE, the local tax authority, which is driving this whole initiative is MOF along with FTA. So they are ensuring that ASPs like us, so Cygnet is a pre-approved ASP over there. So we are being reviewed, our solution is being integrated and tested. So to ensure that all the flow goes very seamlessly. Now, in this whole terminology, the flow starts from your ERP. Let's say when you're doing a sales, you function as a corner 1 here. So you are a supplier. From your ERP or billing solution, the data or the invoice data will get interfaced across to our system. In that interfacing, there could be multiple mechanisms. It could be API, it can be a flat file, the way we do integration. Somebody can even opt for a manual upload as well. So there could be multiple options in which this can be done. And then at corner 2, the validation of this data happens. So it actually authorizes or validates the whole transaction as per the law, as per the mandate of e-invoicing. So if you've already gone through the public consultation document, or we can share it, there are 50 mandatory fields for a standard tax invoice. So as a corner 2, we will ensure that the transaction that you have sent across to us has got all the 50 fields and are following a particular schema and the requirement as per the e-invoicing law. Now, once validated, all the successful transactions are moved to corner 3. We push it to your customer's corner 3. So what it would mean is if I am invoicing you, you will have an identifier, which I will be knowing as I'm your vendor and you're my customer. I will know that this identifier is called PayPal ID. So on the basis of this PayPal ID, I will be issue an invoice to you. So from corner 2, the invoice will reach your ASP. They both will know each other basis a global dictionary. So what you see between corner 2 and corner 3, there is a lookup of which ASP is my customer using through the PayPal ID. I do that. I push the invoice to the ASP of my customer, which is then integrated to the ERP of his. So that's how from my ERP as a salesperson, the invoice is reaching my customer's ERP directly through PayPal network without any manual intervention. And both of these corner 2 and corner 3 are submitting a copy of this invoice to FTA. So corner 2 will report it as a sale done by corner 1 and corner 3 will report it to corner 5 as a purchase done by corner 4. So that's how the authority will know a complete cycle has been completed. And this is just a simple, basic happy flow. There are multiple ways in which there can be failure. The first failure could be, well, the data which is interfaced from your ERP is incomplete. At that time, corner 2 will give you back an error stating XYZ. This field is incorrect or this field is mandatory and it's blank. You have to correct it in the ERP and push it back again. Then from corner 2 as well, there could be a failure that corner 3 is rejected or corner 4 is not available. It means the server is down at your buyer's end. In those cases as well, the corner 2 will have to withdraw the data submitted to corner 5. So there are multiple exceptions handling which are there in place. And as an ASP, we ensure that we are handling all those exceptions. Similarly, in case of purchases as well. So general thought processes, whenever we are talking e-invoicing, we talk about sales or we think about my sales process. But in UAE, your purchase are also going to come through this e-invoicing, and that's where it makes it more complicated. Because assume in a purchase scenario, you are corner 4, your vendor is corner 1. He is raising an invoice in his ERP, goes to their ASP. comes down to your ASP and then is interfaced into your ERP. That's where complications happen because it now interfaces into your core process, core business process, which is purchase. So there could be a GRN check which you are internally doing, some quality check process, contract verification, whether it is a valid invoice or not. All of those checks and balances now needs to happen along with this automated invoice, which is coming along into your ERP or into your ecosystem. So that's where a maximum, I would say, effort will go in ensuring that the integration goes well and it is interfaced well with your business process. Now, talking more about how the interface happens. So I have just magnified or I have just zoomed into the 5 corner model, and we are now looking at corner 1 and 2 as the main components. So we can call it 1 and 2, or we can call it 3 or 4. Rest of the PEPAL framework is on an auto mode. Now, on the left-hand side, you will see there are all the source systems. So there could be SAP, Oracle, NetSuite, and Sage, so plenty of different systems. Through those, the data can be interfaced across into corner 2 through a middleware. That's what I'm trying to highlight here, which we call corner 1A. The approaches can be multiple, like API or data converter. And what the importance or the factor which these middlewares would bring in is, if the data is not complete, if in your ERP you're not recording all the 50 mandatory fields, you can use this to convert the data, to enrich the data. And these systems will also be handy for data archival, because this data needs to be archived for 7 years for any audit purposes. So all of those functionality will be built into it, plus reconciliation. Because ideally today you are doing your e-invoicing, 1 month later you'll be submitting your VAT return. If there are gaps between both of them, the chances of audit are higher. So hence, these middlewares can help you ensure more audit readiness or more compliance from an e-invoicing plus VAT perspective. So that's for the outgoing. For incoming side as well, all your incoming invoices are stored there, can be converted into PDF and can be pushed into your ERP. Now, in order to execute such a project, the challenges, I think you would know these challenges more than me, but primarily what we have seen with our experiences, first one is ensuring all the 50 mandatory fields are available or not. And if you have multiple sources, that adds to the overall complexity. Imagine modifying your ERP to have all those 50 fields, or maybe if you have one ERP and 3 other billing systems, the problem becomes that more emphasized and complex to tackle. And at the same time, even if you have the fields, then ensuring that all the data is valid, it is getting validated, or right and inputs are being added onto it. That's another way of maybe adding a process into your business process and your regular flow of business. That becomes another challenge. Like, one of the questions which might come to you is, when should you print an invoice? Should you print the invoice only after corner 1 to corner 4 all flow has been completed, or if only corner 2 gives you a green signal, you can print the invoice? That will be one question that comes to your mind. If you are selling goods, when should you dispatch the vehicle? Only after the whole flow is completed, or once it is reported to FTA, you are good to dispatch? Well, there are multiple such scenarios which would come in when you start the implementation and you look into your process of taking things further. And of course, since the whole deployments or rollout of e-invoicing is happening in phases, as highlighted by Deepak, there are 2 major waves. In those cases, the challenge will come in because you would not know which vendor are in which waves. So you will have to ensure that you keep the window open for both e-invoicing as well as physical invoices coming in, because there are chances are half of your vendors will be on e-invoice, like they will be mandated to have e-invoice, and some of your vendors will not be. Same on your customer side as well. So it will be a parallel business or a parallel systems ongoing for initial 6 to 8 months. That will just add to the overall complexity of the implementation. In terms of use cases, I think they have done, FT and MOF has done a great job here to ensure that all the key use cases are covered. Like in some of the other geographies where we work, we don't see such extensive list of transaction being covered into the e-invoicing regime and by the tax authority. Like for an example here, even the commercial invoice. So if you are doing a free zone to free zone transaction, or if you're doing a high C sale, all of those intercompany transaction, anything which was in out of scope, they want to get the data. Well, the objective could be to ensure that they get a full visibility of what's all going on within the region. At the same time, to ensure that there are less revenue leakages from a taxation perspective. So right from standard rated sales to deemed supplies to exports and zero rated to commercial invoice and out of scope transactions, they've ensured they've covered everything. Well, since I was talking about the 50 mandatory fields, this is just one use case sample that we are showcasing on the screen with which 50 fields are mandatory. So if you'll see out of these mandatory fields, the ones which are highlighted in yellow, they were part of the original Article 59 as per the VAT regulation. So chances of you having in your ERP are very high. You must have those already. But the white ones are the new ones added as per e-invoicing. And that's where the complications will come in, because whether you modify your ERP, whether you add those fields or you want an ASP to take care of all these additional fields, that would become one more process or a decision that you should take internally. And same, so there are multiple use cases here. For RCM, you need to now ensure that, okay, there are now 52 mandatory fields. So 50 that we just saw, and another two, which are like, what is the category amount and what is the type of the goods or service? That also becomes a mandatory field. So for each of the use cases, there are multiple such scenarios which are there. Now, I won't spend much time onto the MLS. It's a very technical thing, but just to highlight the negative scenarios which I was talking about. So in such cases, when I mentioned that, okay, even if your corner 2 has validated the transaction, and if corner 3 is rejecting, then also you need to resolve and resubmit the transaction. If corner 4 has rejected a transaction or is not reachable, then the C2 maybe withdraw the transaction and then do things. So there are multiple such cases which we need to tackle and ensure that they have been taken care into this whole process that we have. And now, in terms of overall compliance needs, don't look at e-invoicing as just one compliance tick box. Look at it as an overall solution or an overall digitization project for your VAT e-invoicing compliance thing, and even for an S2P automation, because this is an authority push to ensure that all the incoming invoices are also digitized. And hence, what we recommend is you should look at it how it can benefit your other compliances. Like e-invoicing can really benefit your VAT compliance. It can give you a data which is already with the tax authority, sales and purchase both. So your VAT returns and VAT compliance becomes that much easier. Your reconciliations are that much better. These are some of the reports which we can highlight to say how it can be reused. And while you are choosing an e-invoicing provider, these are some of the checklists which we think you should always look at. Like they should have a global experience, they should have a single portal for multiple countries, integration support should be there, flexibility to deploy, and of course, past experience with different countries. All of those things are something which you should definitely look into it. Now, as a next step, what you should look at, or what are the key things that you should consider? Well, this is a high-level 9-step process, which I generally recommend my clients in terms of how they can start the implementation and takes the initial few steps to ensure they are at least ready for the e-invoicing. So if you'll see in this, the initial 3-4 steps, there is no need for an ASP as well. These are the things which you can work with your consultants, you can do it in-house. It is trying to understand your existing system and where are the gaps. So you look at your process for sales and purchase, you look at what process you are following and what are the impacted areas. So you look at the data dictionary, you identify the gaps between the fields. You look at your multiple source systems, you look at how the integration can be done. You review your masters, because even now you need to record the PayPal ID for your customers and the vendors. Even the product HSN code, the authorities have made it as an optional field. Chances are they'll may also make it a mandatory field very soon. So those kind of activities can be initiated immediately. You don't need to wait for anyone. Those are like quick actions that you can start with. And then you review how will you do the integration. You prepare a plan for testing, have the ASPs included, then who will help you in the integration, hosting of all of this, and then taking things further from an overall automation perspective. So now, in terms of timeline, if I would say, even if you consider a couple of months for the initial few readiness or impact assessment, and then couple of months for review and integration, and then taking things further from a hosting perspective, you're looking at somewhere around 7 to 8 months of timeline just to prepare and get ready. And of course, you need to appoint an ASP, and the time that the authorities have given after appointing an ASP is just 5 months. So you should definitely start it as soon as possible. So by end of this year, if you initiate this activity, you should be ready well in advance for the upcoming regulation. So this is again a high level overview in terms of how the hosting will define where your data is being stored. Like we as a Cygnet, we ensure that the data never leaves the UAE region, because that's one of the data sovereignty policy. So for anyone from BFSI, healthcare or government sector, we ensure that our cloud, the Cygnet infra of AP and SMP, is also within UAE. So that's one important element that you should take care of. While the middlewares and those converters and archival, that can happen on your premises on a private cloud or on cloud. It's all a flexible option that should be reviewed at. I think at the same time, let me take also 5 minutes just to quickly showcase a quick glimpse of the application on how the e-invoicing would work. So let me know once my screen is visible. Okay, just log in. So this is the main e-invoicing system. As soon as a user logs in, we showcase a quick dashboard on what data has been interfaced from your ERP, how many invoices are generated, how many are pending. For any data which is interfaced through APIs, if there are any error, the errors are also shown or given back to the API into your source system. And also, if it is a file-based integration or a manual upload, or even for API, the error are shown within the system as well. So this is one example where, let's say an invoice was already pushed, and this is a second time I'm getting the same invoice. I'm stopping that invoice stating it is a duplicate or it's an override invoice. So such error messages will be highlighted by our system when any invoice or any transaction are being interfaced across to our application. There will be also a one-time exercise of onboarding an entity. So what you see here is there will be a taxpayer onboarding. So once you choose an ASP, they will ask you to enter your basic details, and basis these details, you will be actually redirected onto Emara Tax portal. So what we have here is there will be a TRN number, which you mentioned here, and a TIN number. Basis the TIN number, you will get a PayPal ID. You click on this save and you get redirected to Emara Tax, where you log in and you select Cygnet or any other ASP which you have chosen. As soon as you select the ASP and you submit, you get redirected back to the ASP, so that your onboarding on an ASP and onto the tax authority portal is done, and they know that yes, you have chosen an ASP, and then the e-invoicing flow will start. So once I'm integrated, I have the invoices interfaced. All my sales invoices are shown onto this screen. If you'll see here, what I have got is it is called the PayPal status, which says it is delivered. So what we have got here is, and there could be a chance that an invoice is not delivered, it is failed for some reason. So there will be also a failed status, and if you click on it, you see, okay, these are the reasons for which my invoice was not able to be delivered across to my buyer because of XYZ reason. These errors are also given back into the ERP, where the user can do the correction and push back the invoice for the resubmission as well. You can click on a particular invoice and view the HTML of it. You can download it into PDF. So there can be multiple different functionalities which can be hosted here. And secondly, your incoming invoices. So the module here was outgoing, and now what I am trying to showcase here is your incoming invoices. So I just select all my invoices which are on PayPal network. I want to fetch them. So I have all of these here. I can click on any of it. I can view it, because ideally the data on PayPal network is in XML. So your AP will actually accept it, and then an ASP would actually convert it into an HTML, show it here, or even give it to you in an Excel or a PDF so that you can take it into your ERP. And on top of it, you must also do a reconciliation. So reconciliation between your vendor data, your invoice, and your VAT data. All of that must be concluded here so that you know, okay, how many invoices I have, or what is the tax authority, what is matching, what is mismatching. All of those scenarios must be looked into it. I'm seeing a few hands raised. Feel free to drop in your questions into the Q&A section, and we'll be happy to respond to your questions. On top of it, there are also audit trail and data review. So those kind of reports are available to ensure that all the audit trail and data history is maintained for traceability perspective. I think I won't go much into deeper because there are masters, there are settings to manage security, APIs, a lot of things, because we also support like multi-factor authentication. We support two-factor for security. There is a password restrictions, etc. And there are a lot of API settings and portal settings to manage the overall thing, including a document print, because we allow PDFs to be printed. So in a nutshell, I think that's a quick overview of the solution and the invoicing from my aspect. I think we should now.
Sorry, Akash, we lost your voice. Can you say something?
Great. Good afternoon again, everyone, and thank you for sticking around for this amazing, and I'm sure this has been a very informative session so far. I think by now, my good friends Deepak and Akash have given you a very good amount of information, and you know things now from e-invoicing and the terms like PayPal, MLS, TDD. I'm sure you know these by now. Of course, if you need any more information on this, we are always available offline. You can always connect with us, and we can always help you with your queries as well. Now that you've understood about e-invoicing, what it contains, what does FTA require, and what are some of your challenges and concerns that you may have, I think the next best thing that you can do for yourself and for your organization is the tech due diligence, or what we also refer to as the GA, which is the gap analysis. Now, next slide, please. So, Giovanni, next slide, please. Thank you so much. Now, as I said, the next best thing that is supposed to be done is the gap analysis. It's very important for you to also know that if you're doing a gap analysis with us or any other consultant, what you should expect. So here are a few pointers in terms of the high level topics or components that comprise or that make up the gap assessment. So we identify these high level into functional and technical analysis. And in the functional analysis, as you can see, the first thing that we analyze is your entire invoice lifecycle mapping. What is the flow? What is the number? What is number of invoices? So that load balancing and analysis can happen as well. And with regards to that, what are the FTA regulations requirements? So with regards to your invoicing, are there any process changes? We will analyze that, assess that, and provide that to you. Are you ready for the PayPal network? And what do you need to do to be ready for the PayPal network is something that we will cover in our gap assessment. Next is the impact on the core businesses, whether it is your ERP, your multiple ERPs, we look into that. And in connection with that, what are the functional or the operational level processes that may bring a change? And then, of course, we come to what are the data requirements and the ownership matrix, and what are the changes that may happen in the ownership matrix or the DOA. From the technical analysis, this is where the emphasis is on the technology part, because e-invoicing itself may bring in a technology disruption in your organization. So the first thing and foremost is to look into the ERP. We evaluate your existing ERP and measure that against the capabilities that are required to meet the FTA's requirements. You may have a single ERP, you may have multiple ERPs. So all that is taken into consideration. Your organization may also be running on certain legacy systems. So what are the limitations of that with regards to and with reference to FTA's requirements? We will identify that. What we do is, after we've assessed the ERPs and the legacy systems and other, let's say, related third-party or integrated systems that you already have, we will help you design the integration architecture. How do we integrate? What are the data that are requirements, the data points? You have seen some of that in the previous slides, and how that's to be captured and how that's to be taken forward into the integration engine. We also look into the readiness of the infrastructure, whether there is any change in the infrastructure requirement, any upgrades because of the load, or the additional development that's happening in your ERP. What we also look into and highlight is the licensing requirements. Are there any additional licensing requirements from your side? We would do that assessment for you as well, and of course, give you that in our report. Excuse me. The next very important thing is the access control, authorization, security, and governance. So from an e-invoicing point of view, when your ERP is adding additional fields, there are some workflows introduced. So the new workflows, who are the authorizing parties? Are they part of the organization? How is that workflow incorporated in your, sorry, excuse me. How is that incorporated in your ERP? This is the design that will come from us as consultants. Next slide, please. So now, as I come towards the end of our presentation, what's very important and something that I want to leave you with, food for thought, is why invoicing has to be done now and why the gap assessment has to be done now. Okay, so as a summary, you have already seen the mandate that has been given by FTA. Okay, yes, there is an extension given now, but that has actually, I would say, in comparison with the effort that needs to be put in from your organization, that may not give you a reason to actually push forward your efforts or your need to do a gap assessment. The gap assessment also needs to be planned now, is because of the ERP integrations, the data mapping, and the testing. This itself may take a few many months for most of the organizations. For smaller organizations, still a few months, I would say. PayPal readiness, PayPal registration, ASP onboarding, having your agreements, documents all confirmed. This is going to require sufficient time as well. While we're talking about the integration, the structured XML, what is the capability of your ERP? What does your ERP need to develop? What is the additional integration part that has to be provided? All that has to be discussed and agreed mutually. Does your data need to be archived for 7 years? How are you going to archive it? What are the data storage requirements for that? You need time for that readiness. Early pilot, as I say, is always the successful formula for a smoother workflow. And that is something that we always recommend. So the earlier you start with a gap assessment, the sooner you will know what is the effort that has to be done from your side or from the consultant side and the ASP side. Okay. Of course, this includes training of the teams because there are going to be changes in your ERP. This also involves a huge amount of alignment between the IT and the finance departments. And that needs to be done. The alignment needs to be given sufficient time to avoid any operational risk in your businesses. Of course, the earlier you start, you are also audit ready. And of course, as a value add, early movers always build credibility. While you see a smooth workflow and stability in the entire e-invoicing structure, you are also setting a good, credible note with the global partners and the regulators. And lastly, a point that is usually ignored or kept on the back seat is certain processes with each organization take much longer than the others. So if you would assume that, yes, all this process for me and the cost and the development and all of that can be done in a good amount of 4 to 6 months, so I can relax for some time. But as I've spoken to many of you on a one-to-one basis, we understand from our clients that some clients tell us that, oh, our budget approval itself takes 1.5 to 2 months because it goes through multi hierarchies and all of that. So that is something that you have to consider. That is something that we do not know. We cannot calculate. But that is something that you should know from your side. And if you feel that you're one of those where you require sufficient time to prepare the entire plan of action, to have a budget identified, budget approval sent out to the right authorities, and to retrieve that budget for you to start off the integration and the implementation, if that's going to take time, then yes, e-invoicing for you is now, gap assessment for you is now. Okay. Thank you for that. I think, yeah, from my side, over to you, Shivan. Yeah.
Deepak, can you please take up some
Yes,
questions?
thank you, Akash, for sharing your experience in e-invoicing, and also Rahul for ending the session with the closing remarks. Okay, since we have a couple of minutes more, to be honest, our chat box is flooded with a lot of questions. Some of them I have tried to answer online itself, but many questions are still coming up. So what we will do, we will take a couple of questions and then we'll try to answer those. The remaining questions, we will be working on that and then providing a response. We'll try to reach out to you each individually by one. So the first question is it mandatory for all companies to have an ERP system to comply with the new invoicing requirements? And how will business that currently use manual invoicing process be accommodated under the new framework? Um, the first question is whether all companies are required to have an ERP system. It's not mandated by MOF or FTA that every company should have an ERP system. And what is not clear to us at the moment is those companies who do not have an ERP systems, there would be some plan from the government where there will be easy portal access, and then you would be all falling under that kind of framework. So we have to still wait and see what would be the implementation plan for those small companies who do not have a ERP system in place. Rahul, would you like to add anything on that?
Yes, thank you so much, Deepak, for that. So as part of the solution that we bring to you with Cygnet, as part of our solution portfolio, there is also an online portal that comes along where clients who do not have an ERP system can directly input their data into this portal, which can be integrated with FTA, and they can comply with the FTA's requirements. But for this, of course, this is not obviously when you say online portal, it is not just a plug and play. For this, obviously, we need to come and understand first what your limitations are. If you're not using an ERP, what are you using as an alternative solution? You may be using Excels, but are you capturing the sufficient data? What is the additional data or the gap of data that you need to capture, and how we can help you with the best way to capture it and then take it over there. So to answer in short, yes, we do have alternative options where ERPs are not there. And
Right.
Deepak, while I'm still speaking, I'll pick up a question which is more on the technical
Rahul, I
side.
think time is up. Only I will take 5 seconds. It is
Okay,
already
sure.
3 o'clock. We have to respect the time of the people. So your questions will be answered one to one and very soon. And as well as your question will be designed our next webinar. Definitely it is going to be addressed in our next webinar. And thanks everyone to join this. Hopefully we are look for your feedback as well. And very soon we are coming up with the new webinar with the updates from the FTA. Thank you very much. Thank,
Thank you, everyone.
thank
Thank
you.
you, everyone. Thank you for your time. Have a good one.